Hello, everyone, and welcome to today's TripleTree Thought Leadership session. Before we get started, I'd like to go over a few items to help you get the most out of today's session. You have joined the presentation listening using your computer's speaker system by default. If you'd prefer to join over the telephone, just select telephone on the audio pane, and the dial-in information will be displayed for you. You'll have the opportunity to submit text questions to today's panelists by typing your questions into the question pane of the control panel. You may send in your questions at any time during the presentation, and we'll address questions throughout today's discussion. I would now like to introduce Michael Carroll.
Good morning, everyone, and welcome to today's Market Insights live session. My name is Michael Carroll, and I'm the Chief Marketing Officer at TripleTree. I'm excited to introduce today's session focused on healthcare M&A on the move. As our industry has responded to the COVID-19 pandemic, M&A activity took a pause, but has quickly rebounded in the second half of the year. A reminder that today's discussion, the views and opinions expressed in the conversation are those of our participants and are not necessarily reflective of our policy or position as a firm. To begin today's discussion, I'd like to introduce my colleague, Scott Donahue. Scott is the Senior Director and leads the firm's coverage efforts for global companies pursuing growth strategies in healthcare. Scott, I'll turn things over to you to provide a perspective about what we're seeing across the marketplace.
Well, thank you, Michael, and good morning to all of you who have joined our webcast to talk about the current state of healthcare M&A. As Michael mentioned, I'm Scott Donahue, and I'm one of the firm's senior directors. We're looking forward to sharing insights from our panel discussion and have assembled experienced leaders from McKesson, Teladoc Health, and Great Health Partners to share their perspectives on the current healthcare M&A environment. My colleague, Peter Erickson, will lead that discussion. But before we jump into that, we wanted to briefly share our perspectives on current healthcare M&A as a way to set up the panel conversation. Next slide, please. So what is the state of the current healthcare M&A right now? In short, it's really red hot. Continuing the trend of market consolidation over the last few years, 2020 started out really looking no different than 2019 and recent years past. Private equity and strategic acquirers have been very active in the marketplace leading into March. But then, of course, COVID-19 hit, and not surprisingly, M&A activity more or less hit a wall. Many deals in the market were put on hold while others saw their launch pull back. I think some opportunities were able to sneak through, but by and large, March, April, and May were a very slow period for healthcare M&A. But in a remarkable turn of events, starting midsummer, we're now seeing a tremendous acceleration in that healthcare M&A marketplace. Our discussion today will focus on COVID-19's impact to healthcare M&A, and we'll highlight some key learnings from our own transactions, and we'll also hear from others who will share their experiences in doing and evaluating transactions in this environment. Next slide, please, Lori. So when we look at recessionary periods and just a historical look at M&A, I'm going to show two charts here. The top chart is general M&A performance over the past few years, and that M&A performance in a recessionary period. The recessionary periods are represented by gray bars in the chart. The top chart is general M&A activity, and the bottom chart is much more focused on healthcare. I think there's a couple of very interesting things to note in this chart. Typically in recessionary periods, we'll see a decline in volume and transaction value for both general M&A and healthcare M&A, but healthcare really isn't impacted to the extent of general M&A. Just looking at the chart, the peak to valleys in recessionary periods for general M&A are much greater than specific healthcare market M&A, and we feel that healthcare really is much more resilient to recessionary periods than general M&A. But when you look here at the last line in the chart on the far right, healthcare has really taken a big impact this year. The markets have really been impacted by COVID-19, especially early on, as a lot of things like healthcare volumes and just general consumer interest and access to the healthcare system greatly changed with the pandemic and risk of exposure. we think that there's still time this year for this gap in healthcare M&A to close significantly, and we're seeing a lot of that activity right now in the marketplace. I think when we look back at this chart here next year, we're going to see that that gap close significantly. Next slide, please. So as we mentioned, things are really picking up in the healthcare M&A marketplace. This is not all the deals that have occurred, but just a sample, a representative sample of transactions that have occurred in the marketplace here since COVID hit, really in the April timeframe to now. There's a few really interesting things to note on this chart. First, as we said, markets didn't entirely close down. They slowed quite a bit, but some deals got done. And we really pay credit to those firms that had the fortitude and the investment strategy and the plan to get deals done with their solid strategy in place during the early stages of COVID. Secondly, I think what we're seeing now is a real acceleration in transaction activity. The heat, as we said, is turning up, and we're seeing a strong resilience in public markets and the return of debt financing to help support these transactions. Frankly, we expect this accelerated pace of activity to continue for the coming months. I think third, we'll note that there's a real mix of strategic and private equity investors participating in this marketplace. Private equity remains extremely aggressive in terms of their interest in healthcare consolidation. And I think strategic acquirers took the early stages of COVID-19 to reevaluate their strategies, look after some of their own internal operational and business issues. But the conversations we're having in the marketplace clearly indicate that M&A is back on top of the agenda for the strategic acquirers. I mean, if you look at some of these transactions here, and we'll hear from folks like Teladoc Health and their acquisition here of Livongo, which is really sort of a real milestone in the healthcare marketplace activity over the summer here. I think fourth, what we should note here is that many sectors of M&A are represented across healthcare here in this chart. We're seeing activity in things like digital health and consumerism and virtual health, which should not be a surprise at all, given the shift in COVID. But we're also seeing activities in more traditional areas like behavioral health and post-acute care, and other areas of healthcare IT like revenue cycle management. I think it's really true that deal activity is spanning most, if not all, of the healthcare segments. Next slide, please. Behind the scenes, there's a lot of capital that's waiting to be deployed in the marketplace. Private equity has deep pockets and unspent capital, dry powder to put to work. And frankly, those groups are in the business of putting their capital to work. We'll see a lot of that aggressive activity and that capital on the sidelines come back into the market. It already has, and it's coming back into the marketplace. But public company cash balances are also very strong right now. And as I said, our conversations and the behavior that we're seeing from public companies and even private equity-backed strategic companies indicates that they're ready to put that capital to work in the marketplace. And this is one of the reasons why we feel that M&A activity is going to continue to accelerate and pick up here heading into fall this year and frankly into 2021 as well. Next slide, please. With that said, it's really worth recognizing that what it takes to get a deal done in a COVID-19 pandemic environment is different than what we saw early this year and last year. The challenges of COVID-19 have created new business cases and new use opportunities for healthcare for sure, but also really changed the way, to some extent, that M&A gets done. We've talked about the way that COVID-19 has changed healthcare and created new opportunities on last week's Market Insight webcast, especially with the reimagining of healthcare. But we'll also talk about a lot of the other reprioritization of healthcare on today's webcast and hear from our panelists in terms of their perspectives on what and where healthcare priorities and strategies are changing. We'll talk about also things like prospecting and conference and meetings and restrictions and a lot of other COVID-related impacts and how that really changes the way companies go about meeting with and building relationships with companies, a lot of the precursors to actually evaluating and getting M&A done. I think there are a lot of really good questions around business implications to M&A, virtual conferences and the use of technology. And we'll also talk about just public market support and debt market support and new equity issuances and how all that impacts M&A. I think that to help put more color on the current state of healthcare M&A, I would like to introduce my colleague Peter Erickson next, who's one of our firm's managing directors. We thought it important not just to hear from Peter and myself and investment bankers, but also our panelists that we've assembled who are doing transactions in this environment. Monica Brown, one of our panelists, is a Senior Vice President of Mergers and Acquisitions at McKesson Corporation. In this role, she's responsible for all of McKesson's corporate merger and acquisition activity. In addition to her current role, Monica has held various operating roles within the McKesson organization. Also joining us on our panel is Rafael Cofino. Rafael is a partner at Great Hill Partners and covers healthcare investment for the firm. Rafael also serves on the board of directors for several healthcare companies and has some great perspectives on not only evaluating and investing in this environment, but what he'll also share what it's like to actually sit on the board and operate companies in a COVID environment. And finally, our final panelist is Drew Truitz. Drew is a Senior Vice President of Corporate Development for Teladoc Health and is responsible for identifying, evaluating, and executing growth opportunities through partnerships, acquisitions, and joint ventures, and other third-party relationships for the firm. In addition, Drew leads a lot of the post-integration efforts for Teladoc Health. Drew previously served similar roles at Aetna and also at Blue Cross Blue Shield Ventures. Peter, let me turn it over to you to walk through our panel conversation today.
Thanks, Scott. Appreciate it. And Monica, Rafael, Drew, thanks for joining us today. We appreciate it. Let's start with, I'd like to start with the overall M&A environment. Thankfully, we have not been through a pandemic before, so this is new. Hopefully this will be the last time, but we're learning as we go. And so as we just take a look at it from a macro standpoint, from a strategic standpoint, let's just spend a little time starting here. And Monica, start with you. And get a good part question right off the back here. So,
hey, Peter. Sorry to interrupt. We're having some technical difficulties and can't hear you. So we're going to just take a quick 10-second pause to get your audio sorted out, and we'll be right back.
Okay. Can you hear me now?
Yes.
Okay, I'll start over. Well, first of all, Scott, thanks for the introduction. Monica, Drew, Rafael, thanks for joining us here today. We really appreciate it. I want to start higher level and just talk about the overall M&A environment. Thankfully, we've never been through a pandemic before. Hopefully we won't again. So we're learning as we go here. But if we take a step back and just reflect on the work that everyone's doing today and how it's evolved. Monica, I'd love to start with you, and I'm going to start with a two-part question for you right off the bat here. And really just understand, if you wouldn't mind leading us off, how has McKesson and your work within your M&A and investing activity, how have you spent your time during COVID, which may not be a one answer fits all question or answer, I should say. So, but how have you generally spent your time? And then second, how has COVID affected your strategy, if at all? Maybe just comment on that if you would.
Yeah, thanks, Peter. And I think, as Scott mentioned early on in his presentation, all of our M&A activity paused in April. So we really took advantage of that time, I think, to further build out our pipeline of M&A opportunities, and also increased our level of proactive outreach, both to potentially new targets as well as existing targets that had paused their process. And at the start of all of this, I would have guessed that M&A would not come back until late fall, October, November timeframe. However, June arrived and M&A got back into full swing. So the deals started coming back, and we're now just as busy pre-COVID working on transactions. And I actually went back and looked and compared 2019 to 2020, and we're actually ahead on the level of activity year to date than we were a year ago. So I think it's pretty much business as usual for us. Our M&A strategy has really not shifted as a result of COVID. We just continue to build out our pipeline and execute strategic deals as we originally intended.
Rafael, that's great. Rafael, so Scott mentioned it, Monica mentioned it. Are you seeing the same level of activity, this ramp, especially from a new investment standpoint? And also, what are you seeing within your portfolio companies as they look at their continued growth from an M&A standpoint?
Rafael, you're on mute.
There we go. Can you hear me now?
We can, thank you.
We know what you were saying was brilliant, but we're going to ask you to give it another go.
I think our view is very consistent with what has been shared. I think from our perspective, M&A cycles are unique, and this pullback was different than most recent downturns because it was really very much event-driven versus tied to some sort of cyclical or secular change. And so as a result, we think companies were much better positioned to weather the storm and be in a position to react quickly. So early in the pandemic, I think we saw a temporary pause on M&A and investment activities. And then quickly thereafter, I think that we saw, activity pick up really tied to involuntary activity, so very much distressed focused. But I think we're seeing a second wave right now, and this one is very much tied to accelerating growth and kind of a view over the next 5 to 10 years. And from our perspective, similar to Monica, we went back and looked at our data. We tracked several metrics in our funnel, including actionable opportunities. So those are deals that fit kind of our investment thesis and size and scale. And that metric is up 200% compared to same period of last year. So I think there's a pent-up demand and the backlog has been building. And we would expect M&A activity to remain at these high levels through 2020. And there may actually be an accelerant here, given that I think there's a shared view in the market that there's an impending tax change, and I think that's driving founders, executives to really consider trying to get something done before the end of the year in an accelerated fashion. So I think it'll stay busy here going forward.
Drew, you've already been busy. You've there's obviously a major announcement with Teladoc's merger with Livongo. One, congratulations, and that was a big move in the middle of the environment that we're in. Talk about just the strategic thinking in making such a large transaction in this marketplace, and just how that came about, and just how you processed through that, given this time that we're all confronting right now.
Sure. Well, thanks, Peter. Yeah, I think for Teladoc Health, obviously, as we embarked into this sort of pandemic period, there was a huge acceleration around virtual care. And so I'd say the first 2 months were entirely about, volume doubled overnight. We had customers offering free telehealth to tens of millions of members. And so I think, making sure we had the supply to match the demand, making sure that all of the operations and systems were set up, revamping our deal desk because customers were coming and wanting to add telehealth services. There was a huge focus just in the first few months around operations and responding to the huge increase in demand and the corresponding need for supply to meet that demand for virtual care. I'd say the next phase was starting to make sense of some of the changes we saw around telehealth. Obviously, meaningful changes around consumer adoption, physicians' willingness to use, reimbursement, regulation. All of these things were swirling around. And so just really investing time as a management team to to put forward some more strategic thinking and saying, okay, how do we make sense of all of this, and where do we think we need to go to stay ahead of the game? And that really led to, the decision around pursuing a merger with Livongo. I think for us, we've continued to invest in, whether organically or inorganically, expanding our capabilities, expanding into new markets. And ultimately, we recognized that the most meaningful game changer, given all of the different dynamics, was to be able to fully address the entire continuum of care. And we've done that in a couple different ways over time. But we saw with Livongo a real chance to address all of a patient's needs and all of our customers' needs in one complete solution. And so for us, it was a big, bold bet. And clearly, but I think we have confidence that it's the right move to address all of the different dynamics and changes that we're seeing in the marketplace.
That's great. And Drew, as obviously with that announcement and all the work that you have going on there, are you still continuing to look at other opportunities? How are you with the acceleration of activity that we've just heard from? How are you able to manage and think, process that, given I'm sure you got a lot on your plate as an organization with the merger?
Sure. Yeah, and this is our second deal this year. We obviously announced and closed the InTouch acquisition as well. But part of why I think we are the leader is that we don't stop. I think we are not done. We will continue to evolve our business and make investments and do acquisitions to really address what we see as a much bigger opportunity out there in terms of virtual care. So I do, as you mentioned in my introduction, I lead integration. So I'm staying very busy doing that, but I'm also still very much taking calls to see more deals, as you guys know.
Yes, you're wearing a lot of hats right now.
Yes.
Monica, so just building off of that situation, you mentioned that at the outset that your strategy hasn't changed. And so is it fair to say that whether you want to evaluate a bigger transaction or more bite-sized transaction that wraps around things you already do, COVID doesn't really affect that in the marketplace? The strategy is the strategy, and you haven't really changed your thinking of what things you want to evaluate or what moves might make the most sense for you?
Yeah, Peter, I think that's fair. We did with COVID, we revisited the underlying strategies and the related targets just for the post-COVID implications, and really made a determination, do we stay the course, do we reassess, or do we accelerate based on the strategy? And I think for those of you on the call who are not as familiar with McKesson or kind of where we're spending our time, our strategic focus right now is in the biopharma services space, the oncology space, and patient engagement. So with those three areas, we really determined based on all of our findings is that we were either going to stay the course or accelerate our strategies. And Peter, to your point, from a size or complexity perspective, the deal profile doesn't change. We're pretty disciplined on our strategic focus and evaluating companies that fit that strategy and really don't stray from there.
Yeah, great. Raphael, so as you're evaluating new investments, obviously COVID has challenged some organizations, and it's been a catalyst for organizations, as well in this marketplace. And so as you think about that, and as you think about the implications it might have on a business that you're looking to invest in as a new platform, how do you address that? How do you address the unknowns and take that into account as you're thinking about, not just today, but tomorrow and the next year and the next year?
Yeah, look, I think our view is we've learned in past cycles that, growth companies have, multiple options no matter the cycle. And so I think this view that, there's some sort of COVID discount out in the market At least we haven't seen it, and we haven't experienced it in past cycles. I think very much growth assets continue to trade at a premium, and it's a frothy end market there. So, we think that both valuation, deal structure, talent retention, all need to be pretty creative and compelling as we think about winning opportunities. And so we're trying to align our strategies to take advantage of those situations. Anything from process and timing on being able to mobilize very quickly. I think financing has been a little bit volatile. If you rely on debt to execute transactions, I think we've been very fortunate to be very focused on growth assets where leverage is probably less of a requirement, and so we're comfortable fully financing from an equity perspective. But I think their strategies on the unknowns. I think there's on valuation, I think there's been some interesting implications on earnouts where that's been used to kind of bridge a gap between buyers and sellers. I think those need to be simple and structured so there's good alignment. I think we've seen in the market and many of our new deals have some element here, which is there's a rollover by existing investors. So there's a commitment from insiders to continue to be part of the story. And I think that gives new investors comfort from that perspective. And frankly, it gives the insiders an opportunity to have a second bite at the apple. But I think the focus continues to be, markets that we know well, that we understand the changing dynamics, and that fundamentally we think are sound to take advantage of the growth avenues over the next several years. And if so, I think we're then leaning in and very much being offensive versus defensive as we think about our strategies and how quickly we're trying to mobilize to partner with those companies.
That's great. You mentioned it, a couple of you mentioned it, not only, so I'd like to just transition a bit to not just the environment, but then getting into the tactics of executing in this environment even further. And as we all know, in making an investment, in doing an acquisition, relationships matter, and building relationships are a big part of the equation as well. There's all the deal dynamics, there's the fundamentals themselves, but that relationship component's an important one. And unfortunately, we're working very differently now, and we're out of our homes. Some, going back to the office. We're going to talk about some of those details in a minute. But Drew, I'd just like to get your experience in building relationships a little bit different in this world. So you try to get transactions done, or you try to, foster relationships. I'd love to just hear. I'd love to just share your experience in that regard and kind of what you're doing, what you're learning, how you're approaching it.
Yeah, it definitely is. I think for everyone, it requires a lot of adapting, and frankly, it ebbs and flows, right? We all have good days and bad days. I think we were, as I mentioned, we were in the middle of the InTouch integration. And I'd say when COVID really sort of sent us all home, and in some ways that's even the in-person and sort of personal part of that process is even more important than the deal process, because you're bringing much broader teams together and trying to align cultures. So we've really had to rethink not just how we do deals. And what you can do via Zoom, what you can do, or GoTo or Teams or whatever. And I think there are still some things that need to be done in person around a deal. I mean, there's complicated conversations, there's body language that you sort of feel like you need to want to observe in person. And so I think we've definitely shifted, and I think probably over-indexed on Zoom meetings. I think a lot of us are feeling some Zoom fatigue right now because you're sort of going from one, virtual meeting to the next. But I think having said that, everyone recognizes that because there's less in person, finding that right balance, making sure that you're connecting with people on a regular basis and for the right reasons is really important. But we have tried to be selective and strategic about doing some in-person discussions, whether it's deal related or whether it's integration related. And so that means maneuvering around quarantine and travel, and just trying to be creative on how to get people together, socially distance in the same room or area, so that you can have some of those more meaningful conversations. Maybe just one other thing, and I think we've all seen this, not on this call yet, but I think there is an element of kind of humanizing people because the dogs are barking and because kids are running in and out of frame. And so I think as challenging as it can be to do business out of person, or virtually, there is that I think the flip side of that is seeing people kind of in their houses with sort of the complexities of the day-to-day life, and it does create some more of that personal connection, I think.
It's a really interesting byproduct of one, we're all familiar with multiple platforms today of video conference calls, but two, you're right that there's a whole different personal dynamic of getting to know someone in a different way. Monica, just love your, just share your experience in that regard, and Monica, maybe you're more used to it than others. I don't know. You're a very global business in nature, and so I'm assuming that this is maybe more familiar to you than some of us that probably some others. But you tell me, and I'd love to just hear about your experience working remotely.
Well, I would echo Drew's comments. I do think there are certain times when you have to be in the same room. We do, because we are a global company, we do a lot of WebEx or Zoom calls or even pre-COVID via just a call versus an in-person meeting. I think what surprised me was how much you really can get done on WebEx or Zoom. And to Drew's point, I think we're building relationships a little more quickly because you're peeking into somebody's house and seeing their kids. And I think on a call that this group had, I think Drew's daughter was on a piano lesson in the next room. So it does humanize everyone and begin to build those relationships. That being said, I do think at some point in time we will go back to some level of travel and relationship building in person, or as Drew commented, when you're having to negotiate through really thorny issues, sometimes you just need to be in the same room across the table just hashing it out.
And for each of it, Monica, are you traveling today as an organization as you in any of your M&A pursuits or investments?
Not yet. I haven't been on a plane since mid-March, which is, crazy.
Raphael, how about you?
I have not yet, although a few of my colleagues have traveled. So I think ultimately, as you get deeper into a process, I think that human connection, as Drew mentioned, is still very important for both sides. And so I think we are utilizing that where appropriate. But I think upfront, I think we're doing a lot more interaction, in virtual matters. And I think for us, I think, you ask kind of what's been different. I think, this element, although very productive, when you're going and embarking into a partnership relationship, that's an important multi-year combination. And I think it's beyond valuation and terms, that human connection is very important. How will you behave in both good and bad times? And those are difficult things to kind of communicate via digital platforms. And so I think as a firm, what we're trying to do is work harder to make our firm come to life with these executives and companies. And that means, introducing them much earlier to our portfolio companies and executives that have been in their shoes, making those important decisions earlier on, connecting a lot of functional leaders, CFO, head of marketing, head of sales, to areas of how we've worked with them in the past, and really leveraging our Rolodex of people we know that have connectivity to that team, frankly, to do our due diligence as well. So as much as we're relying and opening doors for people to see us, we're probably working harder to make sure we're getting as many touch points into the teams and investors that we may be partnering with. And so I think that's worked out well. I think we're gathering probably better information than we did in the past on those fronts.
And Raphael, are you prioritizing investments? Or let me ask it. Let me start it a different way. Will you make an investment in a company that you have not previously met? Are you prioritizing companies where you have familiarity and you can build upon that? How do you, especially as time moves on in this environment, and maybe that answer is change or is changing, how do you think about that?
Yeah, I think as a firm, we've done deals that fit both of those criteria. Companies we've known for many years, and I think also newer relationships where we were very deep in that market and understood the trends. And so I think, we're open for both transactions and have plenty of examples of those. But I think, I think the market probably less than us is dictating a little bit of the interactions. So I think we're seeing processes that are tighter. So smaller group of investors around the table, probably over-indexing to those that have, relationship with the company and the executives. And so I think the market is probably placing a premium on certainty to close. And I think the perception that if you've known the company and the team longer, that probably gives you an angle. And so clearly we've been fortunate to have, many of those relationships across each of the markets we track and are utilizing that as a strength to try to differentiate our platform. But I think things have changed. I think, as you said, I think everybody here in March would have said it would have been difficult to deploy capital behind a team that you've never actually spent time in person. I think those rules, started getting bent and now probably reinvented here as it's become more normal. And I think that's likely the expectation going forward, that many of our processes have been reinvented because of this the pandemic.
And Drew, just sticking on the travel point just for one more minute, because we're all reacting real time, but just drawing off your experience, especially in the merger that you just did. When we chatted earlier, there were points in time where, and you mentioned it, you just need to get into a room. I'm assuming, you're picking your spots there, but I think you had mentioned that has been, you have done some of that here in just your course of order.
Yeah, that's right. And it has meant being creative. I think there are, just looking at the Livongo process, there are executives that live near me, and they're executives in the Bay Area, and so from their team, and obviously a lot of our team is in New York, so we're able to do, where we needed to have those important conversations and to some degree in person, we were able to either facilitate that or be creative. I mean, I think it was reported with some accuracy, maybe I won't confirm or deny the details, but a meeting that happened in a state that didn't have quarantine preventing people from New York or California from going there and then returning back and having to quarantine. So those types of things you certainly would never anticipate, but there are meeting locations that may or may not be picked just because of whose quarantine list they're on, or vice versa. So those types of calculations, I think you can say 100 times over, wow, 6 months ago, I never would have thought of that. As it relates to doing deals, that's certainly a new one. Let's find a state where we can both visit together and not have to quarantine for 14 days.
Well, there's no doubt we all have to be a little creative in this environment. The nice thing is we're all in the same boat together. So we're all trying to figure it out together and what makes the most sense. Rafael, you mentioned, I want to build on something you just mentioned a minute ago, which was process dynamics, timelines. We've been seeing an acceleration. First of all, there's no one size fits all, but there clearly has been some very accelerated timelines in getting deals done. That you were referencing it. Love for you to comment on that just a little bit further, and what you're seeing from process orientation and timing and due diligence. What changes you may be seeing?
It's been a trend that I think processes have been more competitive, and I think that's, as I said, growth assets that are a premium. There's real scarcity value, and there's significant amount of capital on the sidelines, and so all those dynamics I think have been, on the favor of the side of a seller. And I think COVID probably has magnified those items. I think there is a real premium being placed for certainty to close, and I think that's created probably smaller, more intimate groups of investors that get invited to a process, and that's meant that you probably have had a long-term relationship with a company or bring together some sort of unique angle that people feel like you have conviction and can get up to speed quickly on a process. And so I think we're seeing diligence timelines that are measured in weeks, not months, which is very different for sure. And I think firms like ours need to be very creative and respond to that dynamic and mobilize very quickly if we're going to be in a position to execute in that time frame. And so I think that requires a Rolodex that's deep in order to do kind of off-sheet diligence on competitors and customers and markets, because I think if you're introducing yourself to that opportunity on the sim for the first time, you won't be able to be competitive in this market. So I think those dynamics are changing quite fast, and I think that we're seeing that continue to play out in many of the processes, frankly.
And Monica, talk about your experience, and especially with volume increasing, how do you prepare? How do you prioritizing? How do you do everything you want to do with we all wish we had more resources, more time.
Yeah, well, much like Raphael, I think we are seeing very accelerated timelines. The one, I think, positive coming out of the lack of travel is that it's much easier to get people scheduled both internally and externally. So you're able to be more efficient in getting through the work. So, I mean, we really, obviously, you have to continue to balance, but we have been able to, get through the work, meet the accelerated timelines. And again, going back to, I think the recurring theme throughout here is, if you stay focused on your strategy and you're disciplined, you're very focused on the deals you're working on and put the priorities where you need to have them. You're not chasing anything. And to Raphael's point, often when you're being invited into processes, the company, and so you're not starting from, a sim falling on your desk.
Drew, when we chatted just the other day, you mentioned one of the same things Monica did. In some respects, given we're not all traveling all the time, you can be pretty dang efficient in processing transactions, and that actually helps with the pace of play. Sure.
Yeah, it does. I totally agree. I think just getting people organized and focused, has proven a little easier because we're not spending half the week on planes. I think though, despite the accelerated processes, this is where, obviously, as Raphael said, having those relationships and kind of history with others can really be helpful. But I think it's also because there's this expectation that it's going to move faster, and it's harder to establish some of those personal dynamics that you do have to kind of set some clear boundaries. I mean, for us, we've been fortunate in terms of retaining a lot of the founders or CEOs or key executives as we've done deals over time. And part of that is because we invest so heavily in the cultural piece of the discussion when we are doing a process. Mm-hmm. And so, I think it's this, you have to have discipline because you can't sacrifice that, especially when it's harder to be in person. You've got to make sure that you're validating certain things and that you're not sacrificing, your key principles or your key values just because the deal is competitive and because things are moving fast. So it does require a heightened level of discipline despite all those dynamics.
Drew, what about take off the acquisition hat now and put on your integration hat on? As we talked about that's a responsibility that you also lead at Teladoc. And what are you experiencing from that standpoint? Obviously, the funnel opens. There's a lot more people involved now in the process, I assume. What have you learned? What are the efficiencies, challenges that you're addressing? And I'm sure it's all playing out real time. But just talk about it from now you got the deal done. All right, now we're going to execute. We're going to start to execute. We're going to start the transition into the integration phase.
Mm-hmm. Yeah, I mean, I think you have to over prepare in terms of how you're going to position something, the conversations that need to happen before and after a big meeting, because in an integration, in a merger, in an acquisition, a lot of people just rightfully so focus on, well, what does this mean for me? So I think the change management piece of an integration becomes that much more important, because you can't be in a room with someone, see their reaction, and then go talk to them about it. So I think there's that piece, the personal piece and the way that it affects each individual. We've found it's really important to kind of over focus on that or over index on that. But there's also the social piece that is missing too. I mean, we typically do big dinners the night before or the night during, big integration sessions. That can't happen. And so you have to be creative. One of the things we did with InTouch, they actually have a company band called the Intouchables. And they play at customer events and do sort of funny lyrics to songs that make fun of themselves mostly. And so we had some folks from Teladoc join a band, and we did one of those big Zoom videos that was frankly pretty cheesy, but everyone was really sort of thought it was funny and exciting, and it was just sort of a new, unique thing. And so I think it's important to do that kind of stuff too, because you can't break bread together as easily. And so finding other ways to reduce friction and just sort of take people off guard a little bit is really helpful.
Are the Untouchables now a for-hire part of the organization?
I'm sure. Yeah. I mean, it's a lot of work to do stuff. It's easy to just pick up your guitar and show up and play. It's harder to get all the equipment, and I can't figure out GarageBand very easily when I'm sort of doing 10 other things. So there is a cost involved now to get the Untouchables.
Fair point. Raphael, what about, are you changing any, your processes at all to adapt? You make a new investment, you've got your playbook in terms of how you want to, get going with that. And are you changing those dynamics, or what are you doing creatively or thinking through in that regard?
Yeah, I don't think the dynamics have changed as much. I think, we've always been big believers of having alignment on where we're headed with an investment jointly with the team that we're supporting and backing. And so that to us has always been a core component of our investment thesis. And so probably what has intensified is that communication even during diligence, as much as we're doing work on the asset or the space and vice versa. We're also very, very transparent on, here's the 10 levers that we think your business has available to it. Do we have alignment on the 2 or 3 that we think are the most important to focus on early out of the gates and kind of jointly develop kind of a plan of attack? It is not at least fully built out, at least an alignment. And so I think that assures that both the investor and the team are focused on the similar themes, and through that I think you build a lot of trust, because I think there's always a little bit of hesitation on how is this investor thinking about the asset, what are they not telling me, and that typically all plays out in that first year of the partnership. And so I think if you can short circuit a lot of that and be very clear and transparent and make sure that both sides are clearly aligned, I think that helps significantly. And we have a set of operating partners that are focused really on the growth levers of our investments. And so I think earlier in the process we're introducing those folks so they can start building that relationship with the teams. That's critical, because I think it all comes down to trust, right? If both sides trust each other, I think good things can happen, and that's a little bit harder to build virtually. But so we're trying to be very creative on, as Drew mentioned, how often you introduce them, the level of dialogue, the level of transparency, and setting up a clear map and roadmap built together with the companies so that we can execute out of the gate. Because that is a concern, right? If we're delayed on moving forward, it impacts kind of the ability to execute and achieve the lofty goals that I think we all have for an investment.
Yep. Monica, I want to let us shift gears for a minute and talk about some of the ways that you and McKesson may be looking at investments, and Raphael and Drew as well. We talked about this the other day. One is, so you mentioned your strategy from an M&A standpoint hasn't changed. It's evolved, but how you look at the profile of a transaction, you're staying the course with what makes the most strategic sense. What about also looking at beyond just mergers, just an acquisition or a merger? What about investments? Are you looking at this as an opportunity to take advantage of a time to maybe make some additional investments? You obviously have McKesson has its own venture fund, but I'm curious what your thoughts are about that. That's part one.
Sure.
You get all the two-part questions somehow. And then the second part is, we've had at TripleTree organizations come to us, both strategic organizations as well as private equity, say, we'd love to be introduced to one another and think about making investments collectively together. I'd love to just, if you wouldn't mind, comment on Have you done any of that? Are you interested in those conversations? I'd love to get Raphael and Drew's perspectives. Everybody has different perspectives here. So maybe start with just the types of investments that you might make beyond just M&A or how you look at it. And then two, that partnership, and if that's something that you have considered or considering, and you've had some good comments on that, when we chatted about it just the other day.
Sure. Peter, I think over the last couple of years, we've become more open to the idea of making a minority investment in a business, and have, examples of that where we have invested in the business, typically partner with the business, and and then grow the business, until either we acquire the remainder, or it's sold, or the majority is sold to somebody else, and we just remain in the investment. With regard to your question on private equity, we actually have partnered with private equity. We were not long ago partnered with a firm on an opportunity, and we ultimately were not the winners, but it was a really good experience. I think it is something we continue to explore and have discussions with private equity firms all of the time. Obviously, we're going to have to balance PE's requirements, and I think Raphael and I talked about this a little bit, but PE's requirements versus a strategic's requirements. And typically where we would partner, where McKesson would partner, would be in nascent business, nascent industries or businesses where we can help them with a commercial relationship, but where they need to grow on their own for a while without being distracted by the larger McKesson, and then, later down the road, we'll, typically buy out the remainder of the business, but obviously the PE is going to need flexibility on exit. So it, becomes a competitive process again.
Raphael, talk about it from your standpoint that Monica alluded to, and some of the discussion we previously had around the topic, if you would, and have you evaluated those opportunities, and then what are some of the things, as Monica mentioned, that you're thinking through in those regards when you do?
Yeah, Peter, well, I thought that participating in this panel meant that Great Hill will get a first look on any great ideas that Telelock and McKesson had. So definitely already a great return on investment. No, look, I think we're very open to being very creative, and I think we understand the significant value that strategic partners could have in executing a transaction, and we talked a little about here on creating angles and unique ways to maximize an asset. I think there in several ways a partner with a strategic could be that opportunity. As Monica and I talked about it, it doesn't come up without its complexities. I think the governance is a big one as it relates to thinking through how do you actually paper that. So there could be great intent and a lot of business alignment and synergies, but then it's very difficult sometimes to transfer that to a legal document that I think both sides feel comfortable. And I think frankly the big lever that tends to be give private equity pause is are we capping our potential upside in an opportunity, right? So the moment that a strategic is part of that cap table, how we effectively sold our asset to that strategic because no one else was going to show up because they feel that they're going to be a stalking horse bid to the individual already in the cap table. So that always tends to be a tension. Right? If we how do we align incentives and make sure we both feel like we're going to get rewarded on an eventual exit. But it has worked and it will continue to work, and we've done them as a firm. But they're obviously complicated transactions.
Yeah, and Raphael, I think as you and I talked about, what as a strategic, what we worry about is, are we going to be paying for our own synergies, and how do we make sure the business doesn't get sold out from under us? So it's lively discussions and negotiations when you're trying to work through these deals. But as Raphael said, it's possible to do.
Drew, have you participated and have you looked at opportunities collectively with private equity investors?
Yeah, so we've done one minority investment, more venture than sort of later stage private equity. I'd say for us, it's really a question of priorities. And I think I think from experience, what we've recognized, whether it's a partnership, a commercial partnership, and or a commercial partnership with an investment, it's sort of like, well, is it going to be important enough that we're really going to invest and focus on it? If it is, then maybe we should just own it. If it isn't, then should we really be doing this? You know, we're a smaller company than a McKesson, obviously, and so you know, we have to sort of pick our battles a little bit more carefully. And so as we think about, I mean, I think we have and will continue to look at partnering with private equity, potentially if it's a service that maybe isn't core, but we think customers will want. So we don't want to own it, but we feel like we want to have that arrow in our quiver. If it's a technology that maybe we can differentiate what we're doing, but we don't want others to have access to it. Those are the types of examples that we would consider making a minority investment or doing a private equity partnership. I think to the point that Monica made, though, that creates a whole set of other issues that make it hard for the investor to stomach, right? So, or the company to stomach. Like if we want to have kind of a proprietary or at least some level of exclusivity around technology, that limits the upside for the company and for the investor, and so those are at odds. So we've done it once. We'll try to do it again, but it's for a lot of those reasons, it becomes a pretty complex equation for us.
And Drew, given you're doing your job well, you're not that small of a company anymore. So I granted the relativity. I understand the point. Fair point.
A lot more to do.
I understand. Scott, I think there was a question that someone submitted from the audience, and maybe that's one that we could just use to wrap up our time here with our panelists.
Yeah, thanks, Peter. So it's a little bit of a complicated question, but maybe there's a quick answer to this. We've heard that things are accelerating. We've also heard from Raphael that there's really not much of a COVID discount out there. But the audience did ask just generally how you guys are looking at 2020 performance. Obviously, COVID had an impact early in the year, but just how are you making adjustments to that? And how do you feel about 2020 and 2021 in terms of results that you see presented to you and your opportunities?
Yeah, I can go first. I think there's certainly been, for some part of the healthcare sector, I guess it's a bounce and maybe a little bit of a trough, depending on where you sit. From where we sit, a bounce. I think, but every conversation that I have looks beyond 2020 at this point. 2020 is sort of a done deal, and so then it's a question of, well, you know, what does that imply for 2021 growth? It's a bigger base, so growth is less, or, you know, can you continue the trends? And so those, you know, it is acceleration. And so if we've accelerated 3 years, those trends should be able to normalize, right? If we accelerate, it doesn't mean we then put the brakes on. And so I think what the conversations we're having is, great, you had a blowout year in 2020, but you know, you got to be able to continue it into 2021 and beyond, because that shows a business that has scale, that shows a business that has a model that has growth behind it long term, and is not just benefiting from the COVID bounce.
Monica,
yeah, Raphael, can you just give your 30 seconds each too on that question?
Yeah,
Sure.
I'd say very similar. Oh, sorry, go ahead, Monica.
Monica gets to go first, Raphael.
Me? Oh, you want me to go? Okay.
You go.
I would say what we're really doing is looking almost at the monthly trend to see, you know, what happened during the really difficult COVID period, and then what's happening more recently in the kind of August, September timeframe, and how everybody's coming out of COVID, even though, you know, we're still in the midst of it. So we're getting a little more granular, but kind of ignoring the, you know, if there was a downturn or upturn, trying to normalize the activity and look at the nearer term results.
And Raphael, why don't you wrap us up if you don't mind?
Yeah, I think it's very similar. I think we've been very focused on trying to look past both the ups and downs, but both, you know, companies and sectors that kind of either benefited or were disproportionately impacted, and really thinking about, you know, what do these markets and business model look, you know, 3, 5, 10 years out. and making sure that nothing structurally has changed as it relates to the demand drivers and how businesses are positioned, and then leaning in on those assets. And I think, typically it's more of a friction on how do you think through run rate today and kind of what growth looks like, next year. And I think that's where some deal structuring comes into play with other earnouts or allowing existing investors to roll and maintain some upside on the assets going forward. But I think typically, people are getting more comfortable understanding the dynamics that are playing out, and there's probably less of a gap that existed 2 or 3 months ago from a valuation perspective. But I think that the core is ultimately remaining focused on sectors you think are that are resilient and are positioned to benefit kind of even post the pandemic, and not get distracted away by what happened over 2 or 3 quarters of activity. Ultimately, if you're making a 5 to 10 year bet, you better be right long term and less worried about what bookings took place in this month or next month, in the grand scheme of it.
Well, fantastic insights, everybody. We're at the top of the hour. I'm going to turn it back to Michael on our team just to wrap us here, and then we'll let everybody else go back to the rest of their day. But I just want to say thanks on our behalf at TripleTree, Drew, Monica, Raphael, for participating. We really appreciate you sharing your thoughts and insights during this clearly unique time. And Michael, with that, I'm going to turn it back to you here.
Great, thanks, Peter. So that concludes today's Market Insights live session. On behalf of all of us, thank you for participating in today's conversation. Our next section, focused on a new era for employer-sponsored health benefits, is scheduled for next Tuesday at 10 a.m. For more information on all of our upcoming thought leadership sessions, you can visit triple-tree.com/Market Insights Live. Again, on behalf of everyone at the firm, thank you for joining us today. And a special thanks to our discussion leaders and our panelists. Very much appreciated. Thanks for your perspective and insights. Have a good day.
Thanks, everyone.
Thank you.
Thank you.
Thank you.